When you don't need AC, let me know. I will switch on. Okay? So here, these topics we will discuss. These topics actually we have come across in our life on a day-to-day basis. Corporate governance, agency problem, governance principle versus rules, directors and stewardship, role of the board, corporate governance codes, non-executive directors, remuneration committee, audit committee, reporting on corporate governance, CSR, levels of regulation. Principles of corporate governance we will discuss, developments in corporate governance, role of the board, reporting on corporate governance, corporate social responsibility, ethics, law, governance and social responsibility. What is corporate governance? Actually, without really technically worrying about the terminologies, from our day-to-day life we know what is the akhlaq. If I use the Arabic word, the akhlaq is what the corporate governance is. The way, best practice, the way you should live. If you try to put a frame with some corporate terms, then that is corporate governance. System by which an organizations are directed and controlled by senior officers. For example, now you need to cross the road. Haphazardly, without any thinking, if you just cross the road, is one thing. You go, you look for the zebra crossing, you wait for the signal, you look for the vehicles, and then you cross the road. That is corporate governance.
Doing in accurate way, which is
right way.
Right.
Accurate, yeah, you need to be accurate, and then you should be right also, and you should be fair as well. Some right may not be fully fair also. Correct? So it is what the corporate governance is, what we are talking about, more fairness, justified for everybody.
It
So
come internal.
exactly. It's actually it's how you have been grown from your family. Your parents, their way they
Olukam, what is it?
Olukam, that
how can we say?
discipline.
Discipline.
One example, good example, when I was in Malaysia,
Mm.
you can see, you cannot see a none of an individual who is not wearing mask.
Mm.
Wherever you go, car or hotel or road or masjid or a single person, everyone follow.
Everybody following the rules.
Here it is like this and no mask.
Everybody
You
here.
will not find anyone. And
Everybody following.
yeah, from small to
Rules they are following.
It's the morals. It's how you have been grown. It's how the discipline is. And it is not mandatory. See, corporate governance is nothing for the legal punishment. It's for your own best practice. So it is an issue for all organizations, whether it is commercial or not profit. So you are running a charitable organization, still corporate governance is important. You are running a business, yet corporate governance is based around principles of integrity, accountability, independence and good management. What is integrity? If I tell you a good example, you from which part of Sri Lanka? Colombo. So the famous bus road for you is what? Peta? Okay. You go to Peta, you get into bus and you want to go to Gold, for example. So when you are getting into the bus, are you checking the driving license of the driver? No one will, right? So you have a principal belief that man is an experienced good driver.
This example,
Different days. Because a taxi driver we came, we just normally 3-wheeler we book there. At last to see, he is having a temporary pass. Not, we cannot drive
we cannot
taxi.
drive the taxi.
That's when the accident happened.
Exactly.
He don't have knowledge of how to deal with the high
Mountain and all,
Yeah.
hills and all that.
That they need to have experience.
Yeah, of
In the
course.
3 wheelers they have this experience.
So that what I want to say, integrity means when you are taking up a job, you know what you have to do, and then you know what to cover, and then what are the things that you need to look for. If you are a cook, then you should be a cook. So I'm going to a restaurant and I actually don't know who is the man who cooked. I blindly eating what they are giving. It could be a poisoned food also. Because we don't know. So what the integrity means here, that the cook they are assigning is the man who knows the subject, like what he said. The man who riding the trishaw must be a valid driver who knows how to ride a trishaw with good experience. Not to put anyone into trouble. So that's a good example. The driver, he should be integrity. He should carry the integrity. Not to now. I'm coming to teach here. I'm teaching business and technology, and you three guys are simply trusting me. I should know what this subject is. I should know the nitty-gritties of this subject to deliver and teach you. If I try to, I wrote this here. There is a clear difference between same spelling, if you really see, and almost upside down. Not exactly upside down, but almost. Correct? So, when you are teaching, you should know what you are teaching. And you go to doctor. And I had a very bad experience. I had an accident. And my leg got run over by a vehicle. And my foot, the right leg foot, got totally damaged. So much of wound, and then I had a surgery in General Hospital, Colombo. But 2 days later, I need to take up a job in my village. Then the doctor said, no, you should be here for 1 week to treat your leg. I said, no, I cannot, because I will lose the job. Then with the, by argument, then doctor said, okay, if you want to go, write a letter and give us and go. Against doctor's advice, you are checking out and then discharging and zero going. I have written that letter and I came back. So then I need to treat my wound now. In my village, where I live in Kadukasota, there is one doctor, very famous. All Apurna people going to him only. Fancy and very friendly and all that. I also got. So what he is doing is, he is taking a yellow color liquid, doping on my leg, wrapping up with a bandage, and then sending me off. Every 2 days I am going. So I saw that time around from my home to that place 125 rupees. My company paying that, where I joined. 3 months I am going, wound is not healing. Then one guy advised me, you try the next clinic. One old man, not by tie, with the sarong and the long dress, like that, Bengali dress. And to him, he showed my wound, said to keep the leg on this table. He took a sort of a cleaning thing and said, recall your father, mother, grandmother, he said to me. Then he pulled the bandage. And then he put medicine and he said, if you come again, I will cut your leg. That's sure that wound will heal. Now done, treatment finished, don't come again. If you come again, I will cut your leg. Alhamdulillah, within 2 to 3 days, problem solved. After 2 months, I am hearing, police arrested doctor.
Which one, the previous person?
Yes. His name, I don't know, you know, Mohandan. Heard of a doctor called Mohandan?
The first doctor.
Oh, first doctor. He said he's not a doctor, he's a guy from Nolia, has just done A-levels. And then we went to India and came back and opened up a hospital, the clinic in our area. And he made his money. And then newspaper photo of the arrest and then everything is there.
But in
So,
Quran also in point of view, Islam also says that you have to consult with the ulama, right person. It's very useful.
see, exactly. Now, see, when you have Islamic doubt, not every Maulavi can give you the answer for this. Inheritance rule, one guy. Zakat rule, another guy. Nikah rule, another guy. Like that. You cannot expect one single Maulavi to know all the answers. That day I had a problem about zakat. Actually, one problem for exam question. Then I asked one Maulavi, he said he don't know. Then I was wondering. But in one sense he is honest. And he is feeling the integrity. He referred to another person. So anyway, integrity is you just don't try to cheat people. If someone to rely on you, you make sure that the reality is there. Dealing honestly with employees, customers and all business conflicts. That's integrity. And accountability. So if I sign up for a financial statement, I am responsible for the consequence. Independence. Independent people checking the business is complying with its code of governance. Now, in general, what is independence is if you have to audit a company, you should not be an employee of the company who will audit the company. If you are an employee of the company, then the opinion that you will give will not be, totally, they will be influenced, they will be biased. Finally, good management, best practice, guidelines. So these are the principles that is required to follow corporate governance. Now, in business, we have three segments: the owners and the management. Owner, I will name them principal. Management, I will name them agents. The principal appointing agents to manage their business. So the agents should work to the best interest of whom? The principal. So the principal are the people who are taking the risk by investing their own money. Whereas the agents are supposed to deliver the objective what the principal set. Owners and management are not usually the same people in large organizations. Generally, yes. Now, for example, Qatar Airways. Warren Buffett is the principal. The pilots and the air hostess and all of them are agents. So that flight has to do the flying based on what Akbar al-Bakr wants. Not based on what the pilots are in fact needed to. Corporate governance issues generally arise from the separation between ownership and controlling organizations. Now, when people who are controlling, they sometimes think they are the owners. And they try to supersede the interest of the principal. Like benefits. Giving dividends will keep the principal happy. But if you give dividends, it will reduce the benefits that the agents will receive, like bonus or profit share, bonus or increment, salaries, and other non-cash benefits like car and house and all that, Agency program. Small organization, corner shop owned by Mr. Bean. And if it's a small organization, owner and the principal and the agent are the same. So no problem, they are the same person, there is no issue. But the large organization, the owners are the shareholders. And the managers and the directors are the controller or the agent. So what are the interests of the principal? Dividends and market value. And the interest of the agents, biggest salary and good office and all that. Management may follow their own interest rather than the owners. This is known as agency problem. So governance principle, you need to minimize risk. Like what I said, when you crossing the road, you should cross by zebra crossing. That means you are minimizing the risk of accident. So in a company, when you are doing your business, you should do the business in the right way. Just to refer, Enron, in 2001, if I am not mistaken, no? Yes. So, actually corporate governance principle became more strong after this case. In Enron, what happened actually, there has been a scandal by the agents. They mismanage the properties and the business for their personal best interest, not to look after the shareholders' interest. Then only, how many of you heard about SOX, S-O-X, Sarbanes-Oxley? Anyone heard about Sarbanes-Oxley? It's a sort of an account, not accounting, it is a standard to manage the corporate governance. So, that is from 2001 onwards it came, issued in US. So, Enron is a company operated in America, 7th largest power generating company. And they collapsed because of the mismanagement, and some shareholders went to court and they filed a case, and the court ordered to close the company totally. What you call underlying point is, it's not only they closed the company, they also closed the audit firm. The audit firm has closed not only in US in that particular city, it closed internationally. The audit firm name Arthur Anderson. Those days there was a big fight. Now only we have big four. Clear? So ensure adherence and satisfaction of strategic objectives. The company's strategic objectives, we should be able to satisfy and to adhere with them. Fulfill responsibilities to all stakeholders. We have learned about stakeholders. It's not only about shareholders, it's about many other people. So what we do is that we try to fulfill the aspiration of these stakeholders and to minimize potential conflict of interest. And we learned about Mendelow's matrix, interest and power, if you remember. So here you need to understand. Establish clear accountability. Very clear. Who is responsible to what? Should be very clearly established. Now when someone comes in, it should not be like playing football. Exactly. It must not happen. Maintain independence, especially of non-executive directors and auditors. Now, after the corporate governance concept came in, the board of directors, they have separated into two: executive directors and non-executive directors. The executive directors play the role of key functions of the company, like finance director, marketing director, production director, and so on. Whereas non-executive directors, who are not involved in the day-to-day operation of the business, but they are like the glass, the monitoring watch. They are monitoring the performance of the directors, executive directors. They are independent to the company's normal day-to-day activity. And they will be part of the committees. After the corporate governance came, then they introduced so many different committees: auditors, audit committee, purchase committee, budget committee, remuneration committee, and so on. All of these are, these non-executive directors are the members, and especially auditors also must be totally independent. Provide accurate and timely reporting of trustworthy or independent financial and operational data. So the non-executive directors will be responsible for making sure financial statement prepared is totally trustworthy and it is prepared independently and it's a right and good financial and operational data. Encourage proactive involvement. Do you know what the meaning of reactive and proactive? Varumun kaapon proactive. Vella mandati ko wala potadu reactive. So you know the difference. Reasons why should we have corporate governance? Corporate governance has become increasingly high profile in recent years due to numbers of factors, including high profile corporate scandals. Maxwell, Enron, WorldCom. How many of you know about Satyam computers? There is one scandal in India. The Satyam scam was a large-scale accounting fraud of over rupees 7,800 crores, which eventually turned out to be approximately rupees 12,320 crores fiasco. See the size. So these are standards at large level. Now, that type of fraud we are coming across, and we are talking about that. See? There are so many. Please take some time, search in the net, corporate scandals. Type corporate scam or scandals, and you will get a list. Enron, famous one. This is another one. WorldCom, Railtrack, and also British Telecom. There is one huge one. In Sri Lanka, one bank, Pramukha Bank. How many have heard Pramukha Bank? That also big scandal. Recently, Silico, one finance company. They closed. Central Bank took it recently. No pay. Finance. So it's all big like whale swallowing lot of fish, and we don't know. So increasingly active and intentional international shareholders. That's another problem. Now those days business. If I open a company, I'm in Akmona, my business in Kendi, and I'm living with that only. But subsequently what happened, I have some interest in Qatar, someone Qatari investing on me. When a Qatari investing on a business with me in Kendi, the way that I should prepare my reporting should be like normal, or should be very careful. You should be very careful, otherwise the next moment this Qatari fellow will be too much upset. So that's what we are trying to say here. Increasing media scrutiny. Every now channels, YouTubers, everybody is watching us. What are we doing? Globalization, highlighting business culture, influences around the world. Developments in financial reporting, IFRS. This is the disclosure requirements. All this required. Principle versus rules. In US, there's no principle. They always go for rules. And if you don't comply, you will punish. So, you see, USA Sarbanes-Oxley Act, it's become a law. If you don't have corporate governance in US, you are violating some law. So you will be punished. But in UK, it's just a principle. There's no compulsion. But we have some guidance. There's one guidance coming from Hempel report. Features of a poor governance. Domination by single individual. Lack of involvement of board. Lack of adequate control function. Lack of supervision. Lack of independent scrutiny. Lack of contact with shareholders. Emphasis on short-term profitability. Misleading accounts and information. directors and stewardship. Director is someone who works for a company and is charged with the conduct of management of its affairs, obviously. The directors are collectively referred to as the board of directors, who are elected by the shareholders. Stewardship theory links. Now, stewardship originally came from hotel business. You have stewards in hotel or in flights. So, who are working to satisfy the expectation of the owners. Correct? So, theory links to corporate governance as it views the directors as stewards of the company assets on behalf of the owners. Is that clear? Now, what are the roles? See, they are dividing them as non-executive. They have different membership in this. Now, these are executive directors. There will be chief executive, executive directors, and chairman. Actually, chairman is a Palapurina, no power. He will only be power to run the meeting. But this guy, or sometimes we call it managing director, he has the power. So that takes major policy and strategic decisions. Appointments should be administered by a nomination committee with formal procedures. Directors should have a mix of skills and their performance regularly assessed. The role that should be taken by the board has been much debated. It may include major decisions such as mergers and acquisitions, acquisitions and disposal of major assets, investments, capital projects, bank and other. This all should happen at the top board level. Corporate governance codes. Corporate governance code is in a number of countries have made a different number of recommendations in relation to boards, including individual directors should have relevant experience. Obviously, if you are recruiting a finance director, he must have some experience related to finance. He must have a qualification. He should have good 10-15 years experience in audit firm, industry. We are everywhere. The board should receive appropriate information of sufficient quality in a timely manner, including non-financial information also. Market condition, quality, attendance, and the company reputation. The performance of the board and its members should be assessed annually by whom? By shareholders. The roles of chairman and chief executive should be separated to prevent domination by one person to another.
The chairman and chief executive can be a one person also.
Correct board of corporate governance? No.
Must be.
But many people don't know the difference. Now a chairman, now a chief executive officer, that level of situation only, especially in Qatar and in our countries also. And they think calling chairman is like a big thing.
Chairman has no power.
But he doesn't have any power, like the president in England. He will only wear that pavara and then come out in the meeting, that's it. Non-executive directors. Yeah. The non-executive directors have non-management responsibilities. Act as a balance to executive management. Advise board on issues such as strategy, performance, risk, remuneration of executive directors. These non-executive directors can broaden the experience and perspective available to the board. Offer fee assurance to the shareholders and outside partners. Must be independent of the company. No business or financial connections with the company. Limited time appointments represented in remuneration and audit committee. The remuneration committee, what they do? Remuneration policy and specific packages for executive directors and senior management, they decide. Objectives, procedures for determining remuneration are formal and transparent. Bonuses should arise from achievement of measurable performance. All board remuneration benefits are transparent in statutory accounts. Remuneration package is aligned the interest of management and shareholders. Audit committee. Non-executive directors, at least one of whom must have relevant financial experience. Generally we say there must be a chartered accountant in audit committee. He only understands the language of audit. So, internal control within the organization, liaison with external auditors, oversight of internal auditors. All this they should do. An independent channel is available to report any control issues, resolving any auditor recommendations, and auditor and management disputes. Financial and control systems in place are adequate, including an effective internal audit function. Adequate risk monitoring is in place. These are what we call some aspect of audit committee. Reporting on corporate governance. Companies listed on stock exchange. These are only very small group that company who are listed in stock exchange. In Doha we have Qatar exchange. In Colombo we have the Colombo stock exchange. In America we have New York stock exchange. In Japan we have something. So wherever they listed, in London stock exchange, like that. A narrative statement of how the principles of the corporate governance code have been applied. Statement of compliance with the code throughout the accounting period or reasons of non-compliance. Information about the board of directors. Committee reports, example audit and remuneration committee, statement of effectiveness of internal controls. Corporate social responsibility. What is a good example? Corporate social responsibility. You being a corporate citizen, not a natural citizen, corporate citizen, looking after the society and do something good. During this Aragala, many companies have gone there and then given milk, yogurt, chocolates, phones. I saw one company came and issued mobile phone and the power bank for free. So these are corporate social responsibility. Now, sponsoring to hospitals.
And caring about environment also falling to this?
If you look after the environment by the company, like sometimes you see now, this particular area is maintained by Doha Bank, like that.
So we print like paper bags instead of plastic. It becomes also
Paper bag, if it's a commercial deed, then but still.
No, I mean for avoid the plastic.
Correct.
For the
Yeah. That's correct.
Normal social, what is this?
Responsibility. Approaches to CSR. Proactive strategy, taking full responsibility for its action. Reactive strategy, waiting until there is a public reaction before amending the company's ways. What do you mean by that is that you do everything until someone will come and say an issue. Then you change it. Nadu will come over the border. Sattam Vara, Lucy Vara, you must need to go. Evanam petition report to the Guru, come mission to the again. That's the second scenario. Defense strategy, attempting to avoid additional obligation posed by a particular problem. That is, you are worried about the legal compliance. Accommodation strategy, accommodating the concerns of public and governments in a bid to prevent stricter legislation being introduced. So, any one of the approach you can follow. So, what are the arguments for CSR? Power. Large companies can be very powerful, and as they are not democratically accountable, may infringe others' rights if they do not exercise self-restraint. So this is one reason why you should have corporate social responsibility. Now you are a very powerful company. When you are a powerful company, you don't really need to worry about others. Already you are very powerful. Like in Qatar Petroleum. But still Qatar Petroleum will do some CSR just to make sure that although we are powerful, we are be careful. Second one, infrastructure. Companies depend upon society's infrastructural function. Like having a school, a hospital, a bus stop, a good road, like this. Externalities. A company's operation may have social and environmental consequences which they should pay for. Example, pollution and environmental damage. You set up a factory, the plant, it emits pollution. So what you do is, you then sponsor hospital just to compensate what the damage you are doing here. Public relation. Adopting CSR can result in better image and greater customer and employee. Then you bring people, take photo and put it in Facebook and your website and the TV, radio, those type of things. Fair trade chocolate marketing tool. This chocolate is a concept, it's not a chocolate actually. Stability, sustainability, community, quality. When you market your chocolate, one chocolate company has done this. Fairness tastes better. Why this chocolate is so good? We are selling chocolate, and this chocolate is not only tasty, but we are complying with this. So it is good you buy this chocolate. And I heard in Sri Lanka that some suppliers visiting the some customers visiting the supplier side to find out whether child labor is there. Child labor, less than 16 or less than 12, you go and check and verify that is there. And then you don't transact with those suppliers. So that's again a corporate social responsibility. Now against, key objective, companies can benefit societies most by operating efficiently and maximizing wealth for shareholders. What they are saying is, we as a company do business for us and we only look for our profits. We for our shareholders. So let's say we got 1 million as profits. So we share 250, 252. We don't worry about the society. Then the argument here, I have 250, you have 250, you have 250, you have 250. Individually, you could look after your personal society better. So we don't need to worry about the corporate social responsibility. That was one argument. எல்லாரும் சேர்ந்து கம்பெனியால 50,000 கொடுத்ததை விட 2 லட்சத்தை வச்சு 25,000 ரூபாய் கொடுக்கணும். You can give like this. That's the argument there. Taxation. Companies already fund societies infrastructure via taxes. We are already paying the government, and the government is supposed to look after the society. So why should I? Sovereignty. It should be up to shareholders to donate to charities if they wish to do so. Compulsion in the donation so it's upon my personal interest, not for companies. Payback. Companies should already be focused on anything that will enhance shareholder wealth without labeling it to CSR. Donation to profit sell. So these are arguments against social, corporate social responsibility. Range of ethics and stance. Short term, stakeholder interest, the organization is responsible for its ethical stance in the short term interest of stakeholder. But the government has a wider long term remit. Long term stakeholder interest, wider view of ethical responsibility. Multiple stakeholder obligation, the organization accepts the legitimacy of exploitation of other. Obviously, we talked about that in Mendeleev metrics. So it is not that I should only address now. When I am running this class, it's not only you three are my stakeholders. There are different stakeholders I have. My owner, the building owner, the environment, this restaurant, and so on. So shaper of society, demanding role of multiple stakeholder responsibilities is usually done by public sector. Level of regulation. The relationship between law, governance, social responsibility and ethics. See, this level is like very squeezed and small one. We just need, I am doing something because a law is telling me. Let's talk about the place. Lughal ये ना लुगल तोलचला 4 rakat 11:30 kim 3:30 middle between this time I need to pray this 4 rakat I'm just, since I'm being a Muslim, my minimum requirement is to make sure I'm doing this place. So that's law. Second, corporate governance. What I do now, I go to the masjid and pray. I don't pray anywhere I wanted. I don't pray in the road or at home or at shop. I go to masjid, but I'm not worried about the time. That's the second level of our piousness. Third level, social responsibility. We go to masjid, we also embrace with the others, we start getting ready to pray, and then we pray on time. Finally, ethics. We stand in the line, we don't disturb others, we pray on time, we pray together, and all that happens. Now I hope you understood these 4 levels. In business, when we following corporate governance, we have these 4 extremes. It's because of law, it's because of corporate governance, it's because of social responsibility, it is actually because of my personal ethics. Liquor drinking. Liquor drinking in Qatar is prohibited. So I don't drink liquor because it's law. But I'm now living in Sri Lanka and still I don't drink liquor because it's my ethics. I hope you understood the difference in that. More regulation, less freedom of choice, less regulation, more freedom of choice. In summary, law is highly regulated, corporate governance is less regulated, and social responsibility ethics have no regulation as adoption is down to free choice. Effect on corporate behavior, external, society's ethics, low pressure for social responsibility, internal, directors' ethics, need of shareholders, and business need to appear socially responsible. With this, the chapter is done. Actually, it's more straightforward topic. Can you try to answer this? So what is the question? The following are sanctions used against companies for potentially unlawful actions. Investigation of its financial affairs by a government department or agency. Imposition of a fine by the government's company registration body. Refusal of external auditor to sign the financial accounts. Suspension of dealings in securities by the stock exchange. Now what's the question? Which of the above are consequences of a listed company failing to file its account? Listed company, not called.
Shama.
Yeah, so what is the answer?
So number 3.
Refusal of external auditor to sign the, so non-listed company, the auditors will not refuse?
Number 4 is there.
Number 4, last is compulsory. So let's go back to this. So that means A and B out.
COD.
It should be COD. Now let's come back to this. So D is what? D is having 3 and 4. So C is 2. So we need to confirm whether 2 or 3. So 3 cannot be answered. We discussed just now. So answer is
2 and 4.
C.
Answer C.
FKT company is considering the introduction of a code of ethics following media criticism of its selling practices. Which of the following is most important when deciding on the content of the proposed code of ethics? the best answer.
C.
The main issues of concern to customers who have made complaints.
D.
The generally accepted standard by other companies operating in the same sector. But they want actually, considering the introduction of code of ethics following media criticism of its selling practices. So ethics, we don't need to worry about the legal compliance. It's our personal internal behavior. So the minimum acceptable standard of behavior and conduct of employees, that's the answer.
But they are looking for media criticism, right?
Yeah, so first there was some media criticism.
Yeah.
Then now you need to introduce a code of ethics. Second answer, the legal, no, it's not about legal, so B cannot be answered. The main issues of concern to customers who have made the complaint. It's not only about who have made the complaint, even other customers also we need to look after. The generally accepted standard by other companies operating, no, it's not about that. Answer is A. This I think we never discussed. Answer is D. The monitoring and enforcement of legal and compliance standards.
But that oversight board,
It's a UK board looking after the corporate governance practices.
So that UK was international and corporate governance only UK.
No, it's international public. Is a non-profit corporation established by Congress to oversee the audits of public companies in order to protect investors and further the public. So with that, this chapter is over. So in that also covers this syllabus section B is done. Now we move on to syllabus section C, role of accounting. So we continue that now.